Welcome back to Primary Source China Investment. Peng.guo and I are here, and it's halftime for the China market and for the global economy. So 6 months of 2023 are in the can. And what happened? What did we get right? What did we get wrong? So we're going to look back at our December 11th show where we highlighted some themes for 2023, and we'll see how well we did. First, what we got right. Both Peng.guo and I agreed with technology and financial services that those two sectors would outperform on the mainland, and they did. We'll get into some of those numbers. But what did we get wrong? We got renminbi directionality wrong. So we thought that the renminbi depreciation was over. It was not. So we'll look at the knock-on effects of that. We'll discuss all of this and what might happen in the rest of the year. So, Peng.guo, it's your choice. What do you want to talk about? What we got right or what we got wrong?
I think personally, theme definitely is right because theme is a long, consistent topic of the market. Definitely nothing can be get wrong. But it's from the reality. Entire countries, the policy, individual companies' performance, and the new IPO get some favorite technology, definitely favorite area. So obviously, it's get affected by the consumer and the demand areas. But overall, it's like the engine for the market. So
we have some
of the AI.
We have some of the consumer numbers we're going to get to in a minute. So let's look at the equity side. So ASHR, which is the CSI 300, the large cap stocks that are on the mainland, is down 5% year to date. KWEB, those Chinese shares that are listed in Hong Kong and the US, down 11%. If we pull the chart back a bit more, say a 2-year chart, it's pretty chilling. ASHR is down 33%. KWEB is down 60%. And if you think active managers or smart beta would save you, well, they're down even more year to date. So RAYC, which is a smart beta ETF by a group of people I really respect, that's down 11%. And then the Matthews Fund was down 13%. It's hard to outperform even in a down market. Usually that's not the case, but this year it is the case. So you have negative performance on the large caps and negative performance on the actively managed large cap.
I think overall the valuations is still the anchor. So like the CS 300 represented a large cap, but the financial sectors is around 5.7. So it's much lower than other sectors.
So yeah, we talked about technology, and remember, we want to be very specific here. It's technology traded on the mainland. So in December, Peng.guo, you said you like technology and we like financial services. So those two sectors did outperform on the mainland. China tech is up more than 16.5% year to date. That's huge outperformance. And financial services up a little bit, almost 3% year to date. We're going to put up those names as well. And viewers of the show should be familiar with a lot of these names at this point. But that's two huge outperformance sectors year to date. I mean, 16.8% technology. And that was not some wild guess or some real contrarian. A lot of people were talking about China tech. It's just how they approached it was the wrong way. A lot of those China tech companies were bought because they were in Hong Kong or because they were listed in the US. We've always been saying and pounding the table, buy China tech on the mainland in A shares. One thing we warned about at the time was the wisdom that Chinese consumers would step into the breach and pick up the slack. And it's actually was not the case. Consumer discretionary and consumer staples were both down. Consumer discretionary was down 1% and staples was down 12%. That's a bit of an oxymoron for me, but both of those sectors underperformed. So the Chinese consumer is not out to save the Chinese economy, even though Beijing has been pressing the continuation of consumption for a long time. It's just not happening. What are your thoughts, Peng.guo?
I think that's consistent with micro economy. Is the major reason the unemployment rate is pretty high. So That's what gave a lot of pressures on the
Unemployment rate. Unemployment rate is high, right?
That's right. Yeah. The good thing is that inflation is still okay. So it's not affected the people too much. But then without the income, obviously, people cut all the spendings. But for the next 6 months, those areas still would be good because that is an essential area. As long as the companies started the recruiting and get the better environment and looks at business move to the profit, definitely consumer staple areas will be up. People get the money, they definitely spend it.
That's outlook, though, right? It's people. You have to have strong outlook, and if you don't have strong outlook,
you see this consumer staples sectors is personally I believe it's close to the bottom area, and it looks like a relatively stable in those areas.
Yeah, consumer staples took a pretty big hit in the first half of the year, so that might be an area where the next 6 months sort of picks up and gets closer to the average, so that maybe gets an outperformance in that sector.
So white one is still the leading indicator.
What's crazy is that the Baijiu is considered a staple.
Yes,
it's not discretionary. So always find that interesting, and it's still one of the largest, if not still the largest listed company on the mainland. Maotai is still a massive company. So what did we get wrong? And I mentioned this at the outset. Renminbi continued to depreciate vis-a-vis US dollar, about 4% year to date, after more than 9% depreciation in 2022. That's a lot of headwind for US investors looking at China fixed income. And CBON, it's an ETF that we talk about a lot here, reflects that. That has a current yield of 228 and a year-to-date decline of 2%. Of course, now US dollar investors have a lot more options for fixed income. It's very hard to find a reason to invest outside of US dollar right now for fixed income and short-term rates. What's your thoughts, peng.guo?
Personally, in my personal opinion, I think this recent depression should be like the short term affected by the market. The major reason is so many countries lack of the dollar, so they just sold whatever renminbi and to get dollar back.
Raise dollar,
Yes. So that's the major reason get the high selling pressures in the short term. And secondly, renminbi is pretty much close to the short-term high, and also renminbi is a depreciation save the export companies, so they get a benefit, and the export is also important sectors.
Well, we'll be watching that one very closely. I mean, renminbi US dollar is something that we watch very closely. So finally, you mentioned consumer staples you like. I'm going to keep ride or die with China Tech on the mainland. I still think that's great. One of the things what about small and mid caps, peng.guo? We talk a little bit about that. CSI 500 and the smaller cap CSI 1000 both outperformed the CSI 300 year to date. What's your thoughts?
That should not say the small cap. It should say the mid small cap.
Yeah, that's true.
And the mid companies get a lot.
Yeah,
I think CSI 500 have a much more diversified compared with the 300 index. So the sector get diversified, and also Chinese people is able to manage middle-sized or small-sized companies as well, rather than big company. That's my personal opinion.
Interesting.
Yeah, as long as too big, it always looks like not good. But for the middle size, it's perfect. And also this is a major index many fund chase it.
Right. Remember, for viewers, the 500 is the 500 stocks below the 300. So you have the CSI 300, and then the 500 is the 500 stocks, the next 500 largest after the 300. So the 300 and the 500 are two separate groups. There's 300 and 500, which makes 800. So people understand. Well, peng.guo, we're going to leave it there this week. Thanks for tuning in, everybody, and have a great 4th of July, and we'll see you next week.
Thank you.